Hello everyone, welcome to my channel Accounting with Gawhar Baig. Today we'll be doing the last two contents of our syllabus, which is basically preparation of ledger accounts and the journal entries for provision for depreciation and the preparation of ledger accounts and journal entries to record the sale of non-current asset, including the use of disposal account. So let's go to the journal entries. For the journal entries of purchase for non-current asset, the entry will be non-current asset account to be debited and bank cash company name will be credited. Second one, the disposal or sale of non-current asset. Disposal account will be debited with the cost price. Remember this thing. Most students make a mistake here. And non-current asset account will be credited with the cost price. It's within the general ledger. We have a non-current asset account here at cost. The opening date, we have a balance BD, the opening balance. Then if you have some purchase of non-current asset, bank cash company name, which is as it's purchased. Then we have disposals, which is assets sold during the year. Make sure you write the cost price. And at the closing date, we have the balance CD or the balance carried forward. Then you have to bring down the balance BD for the next year. So these were the journal entries and ledger entries for your purchase and sale of non-current asset. Let's look at the example. I have set it for you. The example, the following information is available for Mr. Gawhar Baig as at 1st Jan 2024. Office equipment account at cost 4,500. During the year ended 31st December 2024, the following transactions took place. The first transaction was on 1st June, check issued for new office equipment 900. And the second transaction was on 1st July, equipment costing 800, which was purchased on 1st May 2020, was sold for 600. So this second transaction, which happened or which occurred on 1st July, make sure you understand that they have given you two figures. One is the cost price, another is the selling price of the asset. What you see in the second part of the transaction, which is sold for 600, that is basically the selling price of the asset. So to record the purchase of equipment, just simply have to debit the equipment account and credit the office equipment account, which basically happened on 1st June. As you can see, we bought new office equipment for $900. So on 1st of June, office equipment is being debited by the cost price, and we bought it through check. So bank account, bank account will be credited by $900. If you're asked to write a narration, just simply write being purchase of equipment. Check. So that is the journal entry for recording purchase of non-current asset. Let's go to the second one, which is the second transaction, basically elimination of cost of equipment disposal, which basically happened on 1st July. Equipment costing 800, which was purchased on 1st May 2020, was sold for $600. So let's record the journal entry for that. So transaction occurred on 1st July. Equipment costing 800. So make sure you write the cost price of the equipment and not the selling price. So let's write it here. 1st July. Disposal account will be debited by $800 and office equipment account will be credited by $800. So this is basically the elimination of cost of an equipment. If you're asked to write a narration, just write here being elimination or removal of cost of asset disposed. In most cases, you are not asked to write this narration, and the requirement will say so, as narration is not required. So let's go to the preparation of equipment account. So first of all, we have to notice or check for any opening balance of an equipment. So we have it here on 1st Jan 2024. We have an opening balance. So we'll have to write that. 1st Jan balance BD 4500. Then we have the first transaction which occurred on 1st June, which is the purchase of non-current asset, bank $900. Then we have the second transaction which occurred basically on 1st July, which was the sale or disposal of non-current asset. Make sure you write the cost price and not the selling price. Then at the end of the year, on 31st December of this business year, balance the account. It's a balance carried forward. If you calculate, it will come to 4600. And then you bring down the balance on 1st Jan 2025. 4600. That was the recording of equipment account.